to maybe 19 Celsius. But generally still on the cool side with temperatures in the mid-teens and some quite heavy showers around this evening over southern parts of the Midlands, East Anglia, and 1 or 2 across the southeast as well. But those showers do fade through the night, so most places becoming dry overnight. Some patchy rain across the far northwest of Scotland. But for most, as I said, it becomes dry and clear and temperatures will drop down into single figures. A fine day for most then to come on Thursday. Could be a little bit of mist and fog early on here and there. We'll always keep a lot of cloud over western Scotland, rain at times over the Highlands, the Western Isles and the Northern Isles. Maybe 1 or 2 showers in southwest Scotland too. But for most places it's dry. Yes, it won't be blue skies everywhere, but most places will see some good spells of sunshine. And temperatures responding, finally getting back up to 20 degrees, maybe 21 across some parts of the south. Cooler feel with the patchy rain across the northwest that persists during Thursday evening. If anything, it gets a bit heavier as weather fronts start to push in during Thursday night and Friday, and these weather fronts will bring some rain across the country on Friday. But after that, high pressure moves back in, and that should bring most of us a fine, bright weekend. Bye for now.
Hello, I'm Michelle Dewberry and you can join me every weekday 6 till 7 on Jubes & Kerr. Me and my panel will get stuck right into the day's events and I can tell you, in fact, I can warn you, expect some robust debates, some strong opinions and perspectives from both sides of the fence. It's about you at home as well. I love to read out all of your comments, or at least as many as I can. So join me, Michelle Dewberry, Monday to Friday, 6 till 7 on Jubes & Kerr.
On radio, they call it the drive time slot, 4 p.m. until 6 p.m. as listeners head home. It's that part of the schedule when the dust of the day's events begin to clarify, and we try to make sense of it for you. Brazier is drive time for radio and TV. It's fast, it's punchy, it's opinionated, there's a Brazier angle and a little bit of levity.
That's the question. That's 2 questions, actually.
That's Brazier, Monday to Thursday, 4 till 6 on GB News.
Hello, I'm Patrick Christie's.
And I'm Mercy Moroki.
Make sure that you join us Monday to Thursday, 10 a.m. until midday, right here on GB News for To The Point.
We're not afraid to talk about the topics that matter to you or the big topics that always matter.
We cover absolutely everything, from the breaking political stories of the day to law and order, what's going on in the channel. We're not afraid to hold people to account.
We always make sure we include your views on our show.
Indeed, if you're thinking it, you can guarantee that we're saying it. So make sure you join the conversation with us, 10 a.m. until midday, Monday to Thursday for To The Point on GB News.
I'm Dan Wootton. Join me Monday to Thursday from 9 to 11 for the feistiest and most fun news debate on TV, where free speech reigns. I'll bring you a sharp take on the day's biggest stories, bombshell newsmaker interviews, and A-list guests. And I guarantee you, no spin, no bias, no censorship, and no reason to go to bed. That's Dan Wootton tonight, Monday to Thursdays from 9 on GB News.
And welcome once again to On the Money, where we're focused on the UK's cost of living crisis, helping you beat the squeeze. I'm Liam Halligan, and for the next hour, we're talking about a whole host of subjects. Should the Bank of England raise interest rates tomorrow? Should the government impose a windfall tax on those big oil and gas companies? And how are young adults meant to buy a house? All that and more, because if it matters to you, it matters to us. On the Money, after the GB News headlines, with Rosie Wright.
Good afternoon. It's just gone 1 o'clock. I'm Rosie Wright, here to keep you up to date on GB News. The European Union will stop importing Russian oil and refined products as part of new sanctions against Russia. The European Commission President Ursula von der Leyen says crude oil supplies will be phased out in 6 months, refined products by the end of the year. Von der Leyen is warning it will not be easy, but it must be done.
Putin must pay a price, a high price, for his brutal aggression. Thus, the future of our European Union is also written in Ukraine. This sends another important signal to all perpetrators of the Kremlin. We know who you are. We will hold you accountable. You're not getting away with this.
Russia's defense minister has told Russian media the Ukrainian fighters in Mariupol's steel plant are now blockaded. The governor of Ukraine's Donetsk region says another convoy of buses left Mariupol in the evacuation operation this morning. They're now heading to the Ukrainian-controlled city of Zaporizhia. President Zelensky confirmed over 150 people were evacuated successfully from the steel plant yesterday. Russian businesses are being banned from using British accountants under new sanctions. The Foreign Secretary Liz Truss says the measures are designed to cut off access to the UK service industry, which she says Russians heavily rely on. It's part of 63 new sanctions, which also include travel bans and asset freezes for people linked to Russian media. In other news now, Sarah Everard's murderer, Wayne Couzens, and the killer of 6-year-old Arthur Labinjo Hughes, Thomas Hughes, have appeared via video link at the Royal Courts of Justice. They're among 5 killers having their sentences reviewed today. Ex-PC Couzens was handed a whole life term for murdering Sarah Everard. Emma Tustin and Thomas Hughes, who killed Arthur, were sentenced for 29 and 21 years. German investigators have found new evidence against the prime suspect in the disappearance of Madeleine McCann. A prosecutor told Portuguese television they're now sure the convicted sex offender, Christian Bruckner, murdered her. That is something he denies. The 3-year-old vanished during a family holiday in Praia de Luz in 2007. The cost of our food shop went up 3.5% last month. The latest figures from the British Retail Consortium show food inflation is contributing to the cost of living crisis. Price increases on fresh ingredients slowed a little, though, as supermarkets compete to keep down the cost of everyday essentials. Well, meanwhile, 7 in 10 first-time buyers are delaying plans to purchase a home. A survey by Nationwide Building Society has found many of those planning to buy in the next couple of years and are struggling to save for a deposit. Nearly half say they're cutting back on everyday spending. Complaints about university courses reached a record high last year. The Office of the Independent Adjudicator for Higher Education is blaming the pandemic and industrial action for poor learning experiences. The regulator says the total payout awarded to students was over £1.3 million. Trade unions are warning cuts to rail funding will endanger passengers and increase the risk of serious train crashes. The TUC claims Network Rail plans to reduce its annual spending by £100 million, mainly by losing 2,500 maintenance jobs. The union believes safety-critical jobs will be cut. The Department of Transport says safety will always be the main priority of the Network Rail. The Transport Secretary says the announcement of the opening of London's new railway, the Elizabeth Line, a day before local elections, is in breach of electoral rules. Grant Shapps has referred the case for investigation by the Electoral Commission. The new line will open on the 24th of May. You're up to date now on GB News. I'll bring you more as it happens. Now let's head back to Liam for On the Money.
And this is On the Money. Coming up, tomorrow the Bank of England's expected to raise interest rates again from 0.75 to 1%, the highest since 2009. Is this really the way to tackle inflation, given that the high food and fuel price rises we're all facing have a lot more to do with the war in Ukraine? As ever here on The Money, we host a grown-up discussion with people who really know their stuff. Plus, should the government impose a windfall tax on those big oil and gas companies after BP posted huge profits? We'll be revealing the results of a poll showing what motorists think. And each day on The Money features an in-depth Money Talks interview. Well, today, we're talking to none other than the British heptathlete legend Katarina Johnson-Thompson. Known as a poster girl of British athletics, she's a 3-time Olympian who holds multiple medals in major competitions, including gold at the World Championships. So why, like so many other young adults, is Katarina Johnson-Thompson struggling to buy her first home? That's later in the show. And as ever, I want your questions, opinions, ideas. What do you think of the issues raised in today's On the Money? Email gbviews@gbnews.uk or tweet @gbnews. And don't forget to subscribe to our YouTube channel as well. I'll read out some of your messages later in the show, so stay with us, because this is GB News. I'm Liam Halligan, and you're On the Money. Now, the Bank of England's Monetary Policy Committee meets tomorrow and is widely expected to raise interest rates to their highest level in 13 years. The anticipated 0.25 percentage point increase will take the bank's base rate to 1%. That is the highest level since early 2009, when rates were being rapidly reduced in response to the global financial crisis. And this higher base rate expected from tomorrow pushes up all other borrowing costs, of course, across the economy. The bank's raised its base rate in each of the past 3 monthly meetings, with the Monetary Policy Committee, a group of 9 economists, finally responding to higher inflation. But should rates be going up more? As the cost of living squeeze continues, rising prices are indeed driving headline inflation ever higher. In March, the Consumer Price Index was no less than 7% higher than the same month last year. So inflation is now 3.5 times more than the bank's 2% target. Now, ordinarily, higher interest rates raising borrowing costs for firms and households would discourage spending and investment, slowing the increase in prices. But some would argue that today's price rises reflect not what's happening here in the UK, but what's happening elsewhere in the world. Conflict in Ukraine and related sanctions are certainly pushing up oil and gas prices everywhere, given Russia's status as a massive energy exporter. Higher UK interest rates won't help make energy less expensive on global markets. Similarly, both Russia and Ukraine are major producers of wheat and other crops, with this conflict also pushing up food prices across the globe. Again, higher interest rates in Britain won't rein in UK food price inflation. Traditionally, higher interest rates have curtailed UK consumer spending by raising the cost of servicing a mortgage, reining in inflation by cutting back how much money we spend each month in the shops. But most households with a mortgage these days are on a fixed rate, so for now at least, won't be affected. There are 8.8 million UK households with fixed-rate home loans, but just 2.2 million on variable rates or tracker mortgages. That's just 8% of all UK households. So again, high UK interest rates are unlikely to slow down the housing market. But higher rates will certainly make life much tougher for cash-strapped households with personal loans in the middle of a cost of living crisis. And given where inflation's coming from, largely overseas, will higher rates help keep inflation in check? It's a really tough conundrum, but the outcome of this Monetary Policy Committee meeting tomorrow will impact everyone, and that's our On the Money question today. When the MPC meets tomorrow, should the Bank of England be raising interest rates? Grown-up conversations with people who know their stuff. That's what we do here on The Money. On cue, Julian Jessop, former Treasury economist, one of Britain's leading thinkers in this area. Great to have you on the show. James Bruffham, he is from Make UK, which represents manufacturers across Britain. Nick Mendes joins us. He's from the mortgage broker John Charcoal. And friend of the show, Louise Oliver, Chartered Financial Advisor for Piercefield Oliver. Here she is in the studio, Louise. As ever, a pleasure to have you with us. Julian, I often wonder what you're thinking about these things. I read your writing with interest and listen to what you say. Are you absolutely sure the Bank of England should be raising interest rates tomorrow?
I'm convinced they should. Indeed, I'd actually argue for a bigger increase than the quarter point that most people are expecting. I think there are two things to stress here. One is, as you said in your introduction, you're absolutely right that raising interest rates now is not going to affect inflation over the next few months. But it could still have a big impact on where inflation is later on in the year. And I think the key here is getting on top of expectations to start to restore some credibility in monetary policy making so that people don't think that prices are going to remain higher for longer. And I think a bigger move tomorrow is essential to do that. The second point, though, is that it isn't just about interest rates. I'm hoping tomorrow the Bank of England would also announce that it's going to start to reverse some of the quantitative easing it's undertaken in the last few years. And this is basically the printing of money to buy government bonds. I hope it'll start to reverse that, because underlying all the increases in headline prices is this massive overhang of cheap money that central banks around the world, not just the Bank of England, but also the European Central Bank and the Fed, have been pumping into economies that are already overheating. And I think in economic terms, that could be just as important as what they do on interest rates.
Interesting indeed. Let's go to the impact on consumers, on firms. Let's go to John Charcoal, the mortgage broker. Nick Mendes. I pointed out those figures in my introduction that not all that many households are now on a variable rate mortgage. Yes, if you're on a fixed rate, if you have to renew that fix, most fixes are for 2, 3 or 5 years. Tell me if I'm wrong, you're the mortgage broker. Then, of course, rates will be higher when you reset that fix as rates go up. But the ability of the Bank of England to control consumer spending through the base rate is not as immediate or as potent as it used to be, right?
Absolutely correct. What you're absolutely, as you mentioned, the majority of homeowners are on fixed rates, of that being on over a longer term period, so typically over a 5-year, than what we've seen previously around the traditional 2-year. Now, when it comes to any forms of base rates, we won't actually see that in progression come through till, when clients come out with their fixed rate deals. But I guess the key thing how lenders or clients have to look at it is if they're planning to move in the short term, can they, and the rates of where rates have been previously to where they are today. So typically, if you think about a tracker as an example, if rates do increase by the 0.25%, we're expecting on a typical mortgage of 150,000 over 20 years, that would increase on their monthly payments around £18. Whereas going from a variable of 4.61 and switching to the current average 2-year fix of 2.65, typically that could save a client around £5,000 over a 2-year period. So the question will be is, if you are on a tracker or if you are on a variable, looking at putting things in place now to avoid any detriment in the future.
So you do think there'll be a move towards more fixed rate mortgages, Nick? Is that what you're saying?
Absolutely. I would say that's going to be a part of the discussions and part of the conversation that clients need to have within their household. If we take into account that, 0.25 to increase to 1%, potentially is only just a start. As Julian mentioned, I think other policymakers and other decision makers would rather see a 0.5 as an example. We've already seen in Australia and potentially the Fed as well increasing today. How rates increase between now and over the next year or so, we could be closer to 2% as an example. So to avoid any future rate rises, protecting one thing that you've got assurances on is to start looking at your options as soon as possible.
Nick Mendes there mentioning the Fed, the US central bank, which is expected to raise interest rates this afternoon, preempting perhaps our own Bank of England. Worth saying also to all panellists, for many people watching this, older people who live on their savings, of course, an increase in the rate of interest is a good thing rather than a bad thing, albeit that interest rates are still way behind the rate of inflation, so you're still actually losing money in real terms on your savings. Let's bring in James Broughan from Make UK. For a lot of your members, manufacturing companies, small and medium size, and some of the big ones too, if they're looking to expand their enterprises, if they're looking to take on more workers, they may have to borrow money. For them, interest rates going higher does slow down the economy, doesn't it?
Well, that's exactly right. And the challenge being faced at the moment by manufacturers is there's a significant output gap in the industry at the moment. And what I mean by that is demand is surprisingly very strong given all the headwinds, but the industry just cannot keep up its output levels. And that's because input prices are going through the roof. The cost of keeping your staff on, the labour wage increases is significant for most businesses. And so with this rising interest rate horizon, just when the industry needs to expand its capacity, and it does that through investment, and it will need to make significant investments to expand that capacity, but also significant investments to achieve a separate goal of achieving net zero, it's going to become significantly more expensive. And I think the risk that the Bank of England has to grapple with when it's looking at its production industry in the UK is just how much it's going to stifle the industry's ability to expand that capacity through investment in the coming years.
Heart of this conundrum, isn't it? If demand is strong, which it is post-lockdown, and supply can't meet demand, if you raise interest rates and firms can't expand to meet that demand, a higher interest rate actually aggravates inflation. But we'll come back to that. Louise, you're not a macroeconomist. You've got far too much personality for that. But you are a financial advisor.
Yes.
We are going to have to get used to living with higher interest rates, aren't we? But maybe not as high as they were before the financial crisis, not back up at 4, 5, 6, 10%.
Yeah, we've had 14 years of low interest rates. The long-term average since 1975 is between 6 and 7%. So we're going to have to get used to more normal interest rates. Now, there are a lot of 74% of people with mortgages are on fixed rates.
Yeah.
So you're right, they'll be sheltered for a while, but they have to plan ahead because when they come off that fixed rate, the next deal will most likely be not as preferential as the deal that they've just come off. And also people on tracker and variable rates, it will affect them now.
Yeah.
0.25% rise on 200,000 mortgage is around £500 a year.
That's big money, isn't it?
That's a lot of money, so we mustn't dismiss that.
Yeah.
People do need to plan ahead. Now, for people who may struggle with that, because bearing in mind everything else is going up, they should speak to their lenders, communicate with them. There are some people that might have overpaid in previous years, and they may be able to have a little bit of flexibility.
And you can get mortgage holidays, can't you?
Possibly.
Written into your contract, there's often a break clause where you can take a month or 2 months off. You can choose to fire that break clause. Not everybody, but it is worth looking at the fine print.
We mustn't underestimate it, but the thing is, check that whatever you do with that flexibility doesn't adversely affect your credit rating. So communicate with your lenders, whether it's an unsecured finance that you have or your mortgage rates going up. But we aren't to sort of, belittle it. It is going to affect some people, and soon.
Well, this is On the Money. We are going to carry on this discussion after the break, keeping this chat going with my expert panel, and we'll also be talking more about the windfall tax after Howard Cox, founder of Fair Fuel UK, said BP's oil and gas profits are a grotesque insult, in his words, to those crippled by the cost of living crisis. This debate, it's hotting up. Stay with us. You're On the Money.
Hello, I'm Michelle Dewberry, and you can join me every weekday 6 till 7 on Jubes and Kerr. Me and my panel will get stuck right into the day's events, and I can tell you, in fact, I can warn you, expect some robust debates, some strong opinions and perspectives from both sides of the fence. It's about you at home as well. I love to read out all of your comments, or at least as many as I can. So join me, Michelle Dewberry, Monday to Friday, 6 till 7 on Jubes and Kerr.
On radio, they call it the drive time slot, 4 p.m. until 6 p.m. as listeners head home. It's that part of the schedule when the dust of the day's events begin to clarify, and we try to make sense of it for you. Brazier is drive time for radio and TV. It's fast, it's punchy, it's opinionated, there's a Brazier angle and a little bit of levity.
That's the question. That's 2 questions, actually.
That's Brazier, Monday to Thursday, 4 till 6 on GB News.
Hello, I'm Patrick Christie's.
And I'm Mercy Moroki.
Make sure that you join us Monday to Thursday, 10 a.m. until midday, right here on GB News for To The Point.
We're not afraid to talk about the topics that matter to you, or the big topics that always matter.
We cover absolutely everything, from the breaking political stories of the day to law and order, what's going on in the channel. We're not afraid to hold people to account.
We always make sure we include your views on our show.
Indeed, if you're thinking it, you can guarantee that we're saying it. So make sure you join the conversation with us, 10 a.m. until midday, Monday to Thursday, for To The Point on GB News.
I'm Dan Wootton. Join me Monday to Thursday from 9 to 11 for the feistiest and most fun news debate on TV, where free speech reigns. I'll bring you a sharp take on the day's biggest stories, bombshell newsmaker interviews, and A-list guests. And I guarantee you, no spin, no bias, no censorship, and no reason to go to bed. That's Dan Wootton Tonight, Monday to Thursdays from 9 on GB News.
Welcome back. You're On the Money. We're discussing, should the Bank of England raise interest rates tomorrow for the 4th time in a row from 0.75 to 1%? That's what's expected. That's what the money markets are predicting. But Julian Jessup says not. He's a former Treasury economist. He's one of Britain's most influential economic thinkers these days. Julian, you want higher rates. You want a 50 basis point rate rise to 1.25%. You want the Bank of England to rein in quantitative easing. But how do you respond to James Bruffan's point at Make UK? There's huge demand. The economy, the supply side can't meet that demand. If you raise interest rates, you're going to lower investment. You're going to make that demand-supply gap even greater and possibly aggravate inflation.
Well, I think that's a very fair point, and I certainly don't think that raising interest rates is going to be painless or costless. But I think the answer to that is that you need to take a longer-term view. In practice, most borrowing isn't financed at the Bank of England's short-term official interest rates. It's financed at longer-term interest rates, and the biggest risk there is that we get an extended period of inflation being higher for longer. So I think it is worth the Bank of England being a bit tougher now in order to bear down on inflation over the medium to longer term and keep long-term interest rates low. If it doesn't do more now, there's a risk it has to raise rates far more aggressively in future, which will be far more damaging for investment. And also it means that inflation might be higher for longer as well, which again would do far more damage to households than a small increase now. So I think it's better for the Bank of England to try and restore some credibility and catch up a bit with what we're seeing now, which is inflation consistently overshooting even its own forecasts.
James Bruffam, Julian concedes you've made a good point. I'd say he's made a good point back to you. This is about long-term stability. The Bank of England has taken so long to start raising interest rates. We've known for a long time inflation was coming. It's been above the Bank of England's target for months and months. If you raise rates now, it means fewer rate rises in the future because the central bank's more credible. What of it?
I think the challenge is in industry as well is there's a perception that perhaps they're on their own. And I suppose this is laid bare when we look at producer price inflation. So obviously there's a lot of attention on the consumer inflation. But when we look at the supply side of the economy, that's running at about 20%, 19.2% actually is the latest data for March. That's on the year. Compared to where it was in March last year. That's up from 10% last month in February. So the prices that the businesses are paying in between each other is very, very high. And I think there's a sense that it's been left unchecked and the Bank of England doesn't really have the power to reverse this at this stage. And that's why we're seeing between industry shocking amounts of price rises at a rate that's never been seen before, as far as the research goes back. And we're seeing that from many, many groups of analysts that the production industries are experiencing record-breaking intra-business price rises and, as a result, selling prices. As far as the interest rates and what can be done, I really do agree with Julian's point earlier that it's going to be really, and often people say this when it comes to MPC decisions, but it needs to be a signal. And I think the production economy and production industry needs that signal from the bank that it is powerful, it can take control of this inflation. And so that small suggested 0.25 point rise is unlikely to do that. So we want to see some action, but really not because it's going to affect anything in the short term very, very significantly, but because it might give some strong faith back into the industry.
Nick Mendes, you're from mortgage broker John Charcoal. Briefly, do you think a rise in interest rate is going to slow down the housing market at all, or is it going to maintain the current tear that it's on?
Well, in terms of the property market, one thing is inevitable that if any further rate rises do happen, that's going to affect people's decisions about whether they move now or whether they move in the future. What we have seen is a continuous climb when it comes to the growth at the rate of the property price increases, but that is starting to slowing down given the rate of inflation and the cost of living. So if we take into account the average home paid for a home climbed by 0.3% to 267, we are expecting to see a slowdown. One is to do, yes, around base rates, but as we've sort of touched upon earlier, there are other impacts going to have on the property market, such as inflation, how lenders look at it in terms of their calculations. And the other part is when we take into account the changes to the property market, would you want to move now with potentially there could be a sort of slowdown in the market come the end of the year moving into 2023?
Big questions. Louise Oliver, financial advisor. In your mind's eye, on the spot, briefly, how high do you think interest rates will go? Where they're going to peak?
A long-term average between 6% and 7%, so getting back to some sort of normality. But in answer to the question about the property and the property prices, I do think that there will be a slowdown in the property market.
The number of transactions.
I do think so.
Because this will be a pause to think.
Especially with first-time buyers. My son's looking at buying a property. He saved his deposit, but he's putting it off not because of impending interest rate increases, but because of the cost of running the household.
Yeah.
You know, the energy prices, food,
dent your
council
confidence.
tax, all of that. So I think that coupled with potential interest rate rises will slow down the housing market.
Louise Oliver, you are staying with us. Thanks to my other panellists there, Julian Jessup, former Treasury economist, James Bruffham of Make UK, the UK manufacturing group, and Nick Mendes of John Charcoal, mortgage broker. A good discussion. We will reconvene pretty soon, I think. Now, on to our next subject. Yesterday, On the Money reported that energy giant BP was cashing in on the cost of living crisis, raking in quarterly profits of £5 billion as those prices spiralled on global markets. These staggering figures have renewed calls for a windfall tax on big oil and gas companies. And now an opinion poll conducted by the campaign group Fair Fuel UK has found that 70% of drivers think there should be a windfall tax, while 84% of walkers and cyclists are calling for that measure. Proposed by the Labour Party, Rishi Sunak, Chancellor, rejected it, but he's been signalling in recent weeks that he may change his mind. Howard Cox joins us, founder of Fair Fuel UK. Friend of the show, Howard, great to have you with us. Tell us about this survey that you conducted. And I thought you were meant to be a free marketeer. Why are you calling for a windfall tax?
Yes, hello, Liam. Nice to be on your show, my friend. Honestly, it goes against every fibre of my commercial sort of acumen regarding actually interfering in marketplaces by putting a punitive tax onto success. But this success hasn't been achieved by any skills. It's been achieved because the global market price of oil has rocketed purely because of various environmental issues and various geopolitical issues, and obviously the Ukraine issue. And I'm afraid they're benefiting out of this. The shareholders are benefiting out of this. The only thing I do say, I'm pro a windfall tax, provided it's structured right and doesn't interfere with future investment from these oil companies into basically sustainable energy sources, and also making sure that they keep the petrol and diesel flowing properly.
Oil and gas companies, which deny wrongdoing, of course, they would say it's inevitable if you take away some of their profits, not quite retrospectively, but you're imposing a tax that they weren't expecting on money that's already been made. If you do that, of course it's going to affect their investment. Why wouldn't they go and invest somewhere else in the world where there aren't windfall taxes?
You're absolutely right, but I'm afraid these are grotesque levels of profits. They've doubled since last year, $5 billion, and in a cost of living crisis. We're getting thousands of emails and thousands of communications of people struggling to put food on their table, to heat their homes or fill their cars. And as I said, this is not achieved because of their skills. It's because of a lucky huge rise in oil and gas prices. I mean, as I say, 75%. It's now the latest poll. It's still ongoing, Liam. It's now up to 75% want a windfall tax. The government can't ignore constituents like that. But it must be structured to ensure somehow the investment does go. There is investment still going into the companies for future energy supply.
Isn't it, Louise Oliver? Here's Howard Cox, who's not known as a Labour voter, and he's proposing a policy that Labour introduced, and for months the Conservative front bench has been dismissing, almost deriding as economically illiterate. Suddenly it's flavour of the month. What do you think is going to happen?
I agree with Howard. I think that there should be a windfall tax on the windfall profits. Now, here's the thing, though. Do we trust the UK government to use that money to deliver it back to the people that need it?
So it should
be
ring-fenced?
Well, if we look at what they're doing in Spain, for example, in Spain, they are removing the tax on household energy. So for us, that would be the green levy and the VAT.
We've been calling for that here on The Money for months.
Removing that and implying a windfall tax on the energy companies to pay for it. So the way that works is that immediately the consumers are getting the benefit. My worry is if we look at the history of the government and how they use taxpayers' money, if we look at COVID loans, $4 billion to companies that didn't exist.
Look at national insurance. That's meant to go to the NHS. It goes to loads of other things.
We've got the mess that the Home Office are making at the minute, spending millions on illegal immigrants. I know it's controversial, but the money needs, directing now to the people who are suffering with the cost of the energy rises. So to do it that way round, to create that tax break and then the windfall tax, I think that Spain have got that right.
And the Italians have also introduced a windfall tax. So, Louise Oliver, you're saying, yes, we should have a windfall tax, but the money must be ring-fenced and must be going to helping cash-strapped households with their fuel bills. Howard Cox, you're pretty well connected politically. I know you talk to people in government and indeed elsewhere across the House of Commons. Is this going to happen? Do you suspect in the end Rishi Sunak will cave and there will be a windfall tax?
Well, first, I've got to say, Louise talked a lot of sense about ring fencing, but this government hasn't got a track record of tax hypothecation. As we know, something like 35 billion, well, in fact, 50 billion is paid by drivers every year to the government, but only 13 to 14% goes back into roads, for example. Yes, I do have some connections with that, and the ones I'm talking to at the moment are moving towards a windfall tax. But as Louise said, it's got to be controlled. It's got to go back to help those people struggling in this cost of living crisis. And let's not forget, the government is still wallowing in a huge VAT windfall, their own windfall, because of the high prices at the pumps. And we mustn't blame retailers on that. So we must, as I've spoken to you before, we must have a pump watch scheme next to a body that actually is an independent price monitoring body that actually controls the prices. Because at the moment, pump prices are still 15 to 20p too high. And so we need that body of pump watch next to a windfall tax.
You spoke to me before, Howard Cox, founder of Fair Fuel UK, and you will speak to me again because these issues will rumble on. Thanks so much for joining us today. And indeed, Louise Oliver, Chartered Financial Advisor at Piercefield. Oliver, great to have you with us as well. This is On the Money with me, Liam Halligan. And coming up, today's In-Depth Money Talks interview is with, wait for it, Katarina Johnson-Thompson, one of the world's most respected all-round athletes. She'll be talking about her struggles, not on the track, not throwing the javelin, but buying a house. But first, it's the GB News headlines with Rosie Wright.
It's 1:33. Good afternoon. I'm Rosie Wright, here to keep you up to date on GB News. In breaking news, Neil Parish has formally quit as a Member of Parliament. It's after the MP for Tiverton and Honiton admitted watching pornography in the House of Commons. The Treasury has accepted his resignation. In international news, Russian businesses are being banned from using British accountants under new sanctions. The Foreign Secretary Liz Truss says the measures are designed to cut off access to the UK service industry, which she says Russians are heavily reliant on. It's part of 63 new sanctions, which also include travel bans and asset freezes for people linked to Russian media. The European Union will stop importing Russian oil and refined products as part of new sanctions package against Russia. The European Commission Chief Ursula von der Leyen says crude oil supplies will be phased out in 6 months and refined products will be by the end of the year. Russia's defence minister has told Russian media the Ukrainian fighters in Mariupol's steel plant are now blockaded. The governor of Ukraine's Donetsk region said another convoy of buses left Mariupol in the evacuation operation this morning. The Court of Appeal has heard that the killers of Arthur Labinjo Hughes subjected the 6-year-old to systematic brutality amounting to torture before he died. Their case is among those 5 killers, including Sarah Everard's murderer, Wayne Couzens, whose sentences are being reviewed at the Royal Courts of Justice today. The Transport Secretary says the announcement of the opening of London's new railway, the Elizabeth Line, a day before local elections is in breach of electoral rules. Grant Shapps has referred the case for investigation by the Electoral Commission. The new line will open on the 24th of May. You're up to date now on GB News. We're on your TV, online and DAB+ radio. Now, shortly, we'll be heading back to Liam and On the Money.
Hello, I'm Michelle Dewberry, and you can join me every weekday 6 till 7 on Jubes and Kerr. Me and my panel will get stuck right into the day's events, and I can tell you, in fact, I can warn you, expect some robust debate, some strong opinions and perspectives from both sides of the fence. It's about you at home as well. I love to read out all of your comments, or at least as many as I can. So join me, Michelle Dewberry, Monday to Friday, 6 till 7 on Jubes and Kerr.
On radio, they call it the drive time slot, 4 p.m. until 6 p.m. as listeners head home. It's that part of the schedule when the dust of the day's events begin to clarify, and we try to make sense of it for you. Brazier is drive time for radio and TV. It's fast, it's punchy, it's opinionated, there's a Brazier angle and a little bit of levity.
That's the question. That's two questions, actually.
That's Brazier, Monday to Thursday, 4 till 6 on GB News.
Hello, I'm Patrick Christie's.
And I'm Mercy Moroki.
Make sure that you join us Monday to Thursday, 10 a.m. until midday, right here on GB News for To The Point.
We're not afraid to talk about the topics that matter to you or the big topics that always matter.
We cover absolutely everything, from the breaking political stories of the day to law and order, what's going on in the channel. We're not afraid to hold people to account.
We always make sure we include your views on our show.
Indeed, if you're thinking it, you can guarantee that we're saying it. So make sure you join the conversation with us, 10 a.m. until midday, Monday to Thursday, for To The Point on GB News.
I'm Dan Wootton. Join me Monday to Thursday from 9 to 11 for the feistiest and most fun news debate on TV, where free speech reigns. I'll bring you a sharp take on the day's biggest stories, bombshell newsmaker interviews, and A-list guests. And I guarantee you, no spin, no bias, no censorship, and no reason to go to bed. That's Dan Wootton tonight, Monday to Thursdays from 9 on GB News.
Welcome back, you're on the money. It's time now for my daily interview series, Money Talks. And today, I'm talking to Katarina Johnson-Thompson, British heptathlete legend, a World Championship gold medalist. Now, whether she's whizzing around the track, high jumping, long jumping, or throwing the javelin or shot, all heptathlon disciplines, of course, Katarina Johnson-Thompson is a born winner. She made her Olympic debut in London in 2012, and she went on to win the World Championships in Barcelona in 2019, breaking the British heptathlon record while she was at it. A hugely respected athlete, Katarina holds the British high jump record, and she's currently 6th on the all-time list of heptathletes across the world. But despite all this astonishing success, Katarina's on that long list of young adults struggling to buy their first home. And with millions of properties getting pushed into higher stamp duty brackets here in the UK, as prices rise, while higher interest rates impact mortgages, of course, taking that first step on the property ladder isn't getting any easier. So joining me now, I'm delighted to say, is Katarina Johnson-Thompson, Team GB heptathlete, my latest guest on Money Talks. Katarina, great to have you on the show. You're joining us from the States. Of course, the Athletic World Championships is in Eugene in Oregon this coming July, and we hope you're training hard and you're feeling good before those. We wish you all the very best in success. Before we get onto the financial side, just tell us a little bit about how you're feeling before those championships. I know a lot of your fans will be interested.
Yeah, I'm feeling good. This summer isn't just about the World Championships for me. It's a very jam-packed schedule for all Team GB athletes or British athletes because of COVID. Many champs have been pushed back, so we've actually got World Champs Commonwealth Games, which are in Birmingham, which are home games, and European Championships in Munich as well. So yeah, it's a busy summer for athletics fans.
Well, I'll be following those, as I'm sure will many GB News listeners and viewers. Fingers and toes crossed for your chances and for all British athletes at those championships. Now, as we were reporting in the news earlier, Katarina, the Building Society is reporting that deposits are the biggest hurdle for those looking to purchase their own properties, and they're reporting that 3/4 of first-time buyers save the deposits themselves, but 1/4 are relying now on the bank of mum and dad. a proportion that's going up all the time. How frustrating is it for you? You are a world-class athlete. You have global fame. You've worked hard all your life since you were born in Liverpool. And even you, an icon of sport, can't buy a house. How does that feel?
I had struggled buying my first home a couple of years ago, for sure. It was. I think the illusion of track and field is, to some, you say all those stats and stuff, but, you know, many people, unless they're ranked in the top 10 in the world, I don't know many jobs with that, you know, struggle to earn a decent wage. And for me, the struggle was definitely, my career isn't going to last the whole lifetime. You know, I'm going to probably retire when I'm 35, and many banks don't understand that that sort of payment setup. But, you know, with the rise of living costs and stuff, you know, many young people are struggling to get onto that property ladder for different reasons. And the main one, which is what, you know, Nationwide Building Societies Commission has found out, is that deposit, which is why I'm so happy to be supporting the 95% mortgage rates, which means that you only need a 5% deposit. And yeah, this is, you know, the current climate of the world, but, you know, people need that extra help to get onto that property ladder.
How big have financial issues loomed in your life, Katerina, as you've taken the step to becoming the world-class athlete that you are? Surely somebody as good as you shouldn't have to worry about money when you're training, when you're focused on being the very best you can be and making your country proud. What's been the reality for you in terms of managing the huge training regime you've had to do, the dedication that you've had to show to become who you are, alongside the realities of making your way in life financially as well and paying your bills?
Yeah, it's hard for everyone. I feel like COVID definitely struck a chord with people where, you know, I had a year out where my main goal for that year was the Olympic Games, which got, you know, postponed or cancelled. And it's tough where what am I going to do then? I can't work from home. So it struck a chord with everyone. And I think it's just about money management and making sure that, you know, you are spending on the right things and yeah, just looking ahead and planning for the future. And I think that what we're talking about today, which is Nationwide Building Society's new scheme of 95% mortgages, is really going to help people get on that property ladder.
As I say, you're proudly born in Liverpool, up there in the northwest. Obviously, homes are cheaper in some parts of the UK than others. Do you sense that your generation is going to be less attracted to moving to the more expensive parts of the UK, to London and the southeast? Do you see from your cohort more people living in places, trying to buy homes, trying to make their lives in parts of the country where homes are cheaper?
Yeah, no, it's better. I think anyone from Liverpool don't want to move away from Liverpool. I think I'm always going to be a home bird in that respect. And fortunately for me, you know, I've got a better way of living as opposed to, you know, people who, you know, want to live in smaller places in London and share. I think that it's definitely a cheaper property. It's cheaper to buy properties up north. So I'm lucky in that respect. And I've found in the last couple of months that prices in Liverpool are actually going up quite significantly because people realise that they can move away from London and they can work from home and they don't necessarily need to be in a major city to do their work. So it's good and it's bad for sure, but I'm fortunate enough to be born and raised in Liverpool.
And finally, Katerina, your generation is less likely than your parents' generation to own your own home. Your generation's spending more on rent than any generation since the 1930s. The UK as a whole now has a lower level of home ownership than the European Union average, so maybe we're not the nation of homeowners that we used to be. What would you say to ministers who maybe think your generation aren't bothered about whether or not they own a home? What does home ownership mean to you in terms of security and fulfilling other aspects of your life's goals in the way that you've managed to fulfill so many of your athletic goals as well.
Yeah, for sure. It was a huge part of what I wanted to achieve. The minute I started getting money, that's what I wanted to put it into, because I know it's such a huge life milestone, and I think that young people should be given the opportunity to be able to get onto the property ladder like our parents, like our grandparents were. And it's a huge thing to just ground and center a person and know that, you know, whatever happens, they've got this little bit of land, and, you know, it's sort of like a safe space. So I think that it's very important for young people and for mental health as well.
Katarina Johnson-Thompson, if I may say so, beautifully said. You're a Team GB athletics legend, and I think you could emerge as a big advocate for home ownership for your generation too. All the best to you and the rest of the British team at those Athletics World Championships in Eugene, Oregon in July. Katarina Johnson-Thompson, thanks so much for joining me here on The Money. Now, as the cost of living crisis continues to bite, shop prices are rising. So far, they're up 2.7% over the last year. That's according to the British Retail Consortium. That's actually less than the headline rate of inflation, which is 7%, as I said earlier. And rising energy costs and the ongoing Russia-Ukraine conflict are clearly pushing up the costs of energy and other vital inputs, which means we can expect inflation to get a lot worse before it gets better. Now, somebody who really understands the retail world inside out is Eliza Rager. She is the CEO of the world-renowned lingerie empire, Janet Rager. As the daughter of the entrepreneur Janet Rager, who set up the company, Eliza's been part of the family business since she was just 14, with her parents insisting she gained experience in all parts of the company. Since her mother sadly passed away in 2005, Eliza's run the company, taking it from strength to strength and bringing the brand to high street stores such as Next and Ann Summers. Here to tell us more about her company and coping with rising retail prices, it is Eliza Rager, CEO of Janet Rager. Eliza, an honour to have you. Wow, what an incredible combination of guests, from Katarina Johnson-Thompson to Eliza Rager. Incredible people in their fields. It is a very well-known company. Your company has had huge success. I'm sure your mother's memory lives on of everything that she achieved.
Absolutely.
Tell us about the retail environment out there. Obviously, lingerie is more of a luxury good. It's not so much a necessity.
No, you need underwear.
You certainly need underwear. But your lingerie is, with all respect, it's very beautifully made. It's maybe a little bit of an indulgence for some people. How's it feeling out there?
You know, we all need treats. We need indulgences. We need everyday treats. So at the moment, we're working on a new lingerie collection. And when that comes out, it is priced so it is an everyday treat.
I see.
It is an everyday necessity, but, you know, we need necessity. We need things that are useful and that make us feel good, which is why we have a home fragrance collection as well, which I've brought in a few pieces.
This is a new departure for you, isn't it? To go into, use your brand, leverage your brand, as the management consultants say, to enter into the fragrance market too.
Yes. So it is about daily treats. It's about things for the home, things for yourself, things that we can use and see and smell and use our senses. So, of course, lingerie, as you say, very expensive lingerie is an indulgence, but our lingerie is going to be very fairly priced. It's well priced. So, whereas you do need to wear knickers, you need a bra, these are not ones that will be so expensive that they are out of most people's reach.
How does it feel to you out there? Your family, really, you are retail legends.
It's a really good question.
How does it feel? And I'm not just talking about in London and the South East, I'm talking about across the country.
I'm not able to answer that question fully because I'm very London-based. So, yes, when you're in London and you go into central London and Bond Street and Oxford Street, and at the moment it's booming because everybody is out shopping. They haven't shopped for 2 years and they are out and they are spending money. And whichever department store you go to, it's heaving. If you go a little bit outside of London, I think we are already beginning to feel the effects of the fuel crisis, rising costs in general. Do I need it? Can I do without it? Can I make it last a bit longer? I think, in general, people, after 2 years of not going anywhere, they need a treat. They need to indulge themselves. But I think they will be considering purchases quite carefully now.
If you had a minute in a lift with Boris Johnson, what needs to change in terms of the British business environment? You are a successful business, but you want to grow, you want to expand, you want to employ more people, you want to generate more wealth, tax revenue for everybody. What's holding you back?
Oh, God, I don't think we've got long enough to discuss that. I think, in general, I mean, I think Rishi Sunak is probably the best of the bunch right now. I think he did a fantastic... He had a very good programme throughout the pandemic and really did the best he could. One of the things that we have to remember is the whole of Europe is struggling like we are. Yes, you know, Spain has put in very quick fuel taxation solutions, and I think we will follow very quickly.
Do you think he's an instinctively low-tax kind of guy, though, the Chancellor, Rishi Sunak?
Yes.
You do?
Yes. But one of the things that we have to remember, what is given with one hand has to be taken back with another. So it's all very well saying, oh, we're going to give you 1 million tax breaks here, but 1,000,001 are going to be taken back at some point.
There's a lot of doom and gloom out there, of course. A lot of families are suffering, trying to make ends meet, and I suspect, it brings me no pleasure to say, this inflation is going to get worse before it gets better. In the round, though, in the medium to long term, how optimistic are you about the UK as a place to do business, as an economy, as a place where people can lead a prosperous life and fulfil their aspirations?
You know, I'm one of life's optimists, and I think the UK has always been, certainly in my lifetime, yes, we've had a few blips. What goes up comes down, and what goes down has to come up again. And I do think the UK environment is a very positive one, and over the decades has been so. And I think we may go through a blip now, but I think the British people are very resilient and very resourceful. And I think in bad times, the two things you need most are resilience and resourcefulness. And I think British people have this.
Tell us about what it's meant to you to have this life in business, to be carrying on this brand, to be fulfilling your mother's aspirations and taking it forward and doing things with the company that maybe she might not have thought of. It's not just business for you, is it? By definition, it's personal as well.
It's very personal. You know, certain people have said to me, oh, you know, you shouldn't be too passionate and you shouldn't be too emotional about your business. Well, I'm completely passionate and completely emotional. And for me, it is my life. So the success of my business and the success of my life are completely interwound. And
it's like that for so many entrepreneurs, isn't it?
I think so. And I think if you're not passionate about what you do, perhaps you should do something else or get a hobby.
And what would you say to young people, particularly young women, setting out, thinking, I don't want to be employed by somebody, I want to paddle my own canoe, I want to plough my own furrow, I want to set up in business?
You know, I think in today's age, we can't say young men, young women anymore because we're all the same. So the opportunities that exist for young women exist for young men. And I think for all young people, have a goal, set yourself a target, have a dream, map it out, do a board, do a dream board. Use all the tools you can and ask for help. I think asking for help is a big tool, and it helps all of us. And we all need help. You know, I think no matter where we are in life, you need to ask a question. Ask someone who knows.
And be determined.
Yes, you do need determination. Because, oh, today I feel like this.
Bounce back.
The bouncing back. And you know what? There are stumbling blocks along the road. There are tough times. It hasn't always been easy. There are times you think, oh, my God, how did we get here? But things change. And I think one of the things that we all have to remember, whether we're just starting on our career path or we're really far down it, there are always bumps along the road. There are things that happen completely out of our control and things happen that are within our control. And we have to learn to navigate those.
Well, Elisa Rager, it's been brilliant to talk to you. You are the CEO of Janet Rager, and thanks so much for appearing here.
Thank you. Nice to meet you.
That's all we've got time for today, I'm afraid. Thanks for joining me here on The Money. We'll be back tomorrow at 1 p.m, continuing our focus on the cost of living crisis and helping you beat the squeeze. This is GB News. I'm Liam Halligan, and that was On The Money.
Hello. Warmer weather is on the way, but today's a fairly cloudy one. Quite cool in most places, with some heavy showers, particularly in the east. Meanwhile, many western areas showing signs of brightening up as the afternoon wears on. Here's the big picture. High pressure is trying to move in, but these weather fronts are firmly controlling our weather today, bringing a lot of cloud and shunting showers eastwards. We're going to see one or two heavy ones this afternoon, most likely over northeast England, but also over the Midlands and drifting to East Anglia. The showers over eastern Scotland could be heavy, but they are fading here. Most of Scotland becoming dry this afternoon. Northern Ireland's mostly dry as well, with a fair bit of cloud. Some breaks in that cloud for Wales and southwest England, so a bit of sunshine here. Could see temperatures up to maybe 19 Celsius, but generally still on the cool side with temperatures in the mid-teens. And some quite heavy showers around this evening over southern parts of the Midlands, East Anglia, and one or two across the southeast as well. But those showers do fade through the night, so most places becoming dry overnight. Some patchy rain across the far northwest of Scotland. But for most, as I said, it becomes dry and clear and temperatures will drop down into single figures. A fine day for most then to come on Thursday. Could be a little bit of mist and fog early on here and there. We'll always keep a lot of cloud over western Scotland, rain at times over the Highlands, the Western Isles and the Northern Isles. Maybe one or two showers in southwest Scotland too. But for most places it's dry. Yes, it won't be blue skies everywhere, but most places will see some good spells of sunshine. And temperatures responding, finally getting back up to 20 degrees, maybe 21 across some parts of the south. Cooler feel with the patchy rain across the northwest that persists during Thursday evening. If anything, it gets a bit heavier as weather fronts start to push in during Thursday night and Friday, and these weather fronts will bring some rain across the country on Friday. But after that, high pressure moves back in, and that should bring most of us a fine, bright weekend. Bye for now.
Millions of people across the UK are heading to the polls in a vital test of Boris Johnson's premiership. This isn't just about Westminster. These are local elections. A chance for you to decide how your community is run. We'll be talking to senior politicians, election analysts, our team of reporters around the country, and of course, to our team here in the studio. And we'll have comprehensive coverage of the elections to the Northern Irish Assembly. That's the UK Votes 2022 from 10 a.m. on Friday morning here on GB News, the People's News Channel.
Hello, I'm Michelle Dewberry, and you can join me every weekday 6 till 7 on Jubes and Kerr. Me and my panel will get stuck right into the day's events, and I can tell you, in fact, I can warn you, expect some robust debates, some strong opinions and perspectives from both sides of the fence. It's about you at home as well. I love to read out all of your comments, or at least as many as I can. So join me, Michelle Dewberry, Monday to Friday, 6 till 7 on Jubes and Kerr.
On radio, they call it the drive time slot, 4 p.m. until 6 p.m. as listeners head home.